Hi guys, as expected, Fed has cut the interest rate and it looks like the market is already priced at 10. It's 3 o'clock in the morning as I'm recording this from Delhi airport. By the time I reach London, it will be quite late for India for me to get this video recorded from London before I head to Paris. So I wanted to get this video squeezed in. So I did it as an early morning recording. So if it's not up to usual spec, I'm sorry for that. But Fed did cut interest rate as expected, and the market landed flat. And the reason why it landed flat is because it's already been priced in, this rate cut. And the other reason why the market was flat was the Fed came out saying, don't expect any more rate cuts this year because of looking at where inflation is, where the government shutdown is, and the lack of data and transparency right now in data. You can't blame them, but sit on it. And what seems very evident is within the Fed, there seems to be a lot of infighting with Stephen Mirren on one side and the rest of them on the other side. So even within the Fed, you can expect a lot of volatility. So this is the main reason why the market is reacting the way it is. So there's going to be a lot of tug of war within the Fed going forward till the existing chair exists next year. Meanwhile, if you look at the big tech, their earnings were out. Microsoft has beaten all analysts' expectations. Meta had beaten expectations. So had Alphabet. Microsoft, their revenue was up by 18% and the EPS was up to $4.13 per share. And net income was up, though they've taken a $3.1 billion hit from the OpenAI investment. Azure Cloud is a still money churning machine, which has grown 40% year on year, beating estimates by 38%. And Office and LinkedIn has also done better than expected. And even in personal computing, they've done very well, beating expectations. So overall, the company is doing well. The CEO did admit the partnership with OpenAI is the one of the most successful partnerships they've had ever. At the same time, they are rivals. Meanwhile, in Google, their revenues are up. Expected was 99 billion, but they hit 102 billion, up 11%. EPS is also up to $3.10. Cloud revenues up and YouTube revenues are up. So they've also beaten expectations. And most of it seems to be coming in from cloud and AI for Google. Meta also showed strong revenues, beating estimates and expectations, but the market did not react positively because of what is happening within their own AI sphere. So what seems to be really the thematic understanding from all this is that all three mega caps have beaten expectations, each facing escalating AI infrastructure cost. Cloud remains the big battlefield where Azure is up 40%, Google is up 35%, and Meta's AI data center spending is soaring, which is what the investors seem to be most worried about. In the middle of all this, of course, we have AI scale versus AI profitability. So this is the next phase in this, which we'll have to keep an eye on. Recently, Bill Gates was on a show in CNBC and he was talking about how there is a bubble, but it's not like the bubble which we think of as tulip mania. He said it's more like the internet bubble, where there is useful technology here and it's going to be life-changing for humanity as a whole. But like in the internet bubble, we do not know which companies actually came to succeed. Here also, we do not know what will be finally standing once this AI cycle is done. So it is a sector to wait and watch. And like Anand said, one of the reasons why he looked at Google was because of the cloud computing and the profitability when market had beaten it. And because of Google, we have exposure in AI. Same is true with Microsoft. If and when Microsoft does correct, should be an opportunity for you to definitely sip and dip into it because Microsoft will give you that exposure even to OpenAI. So that is a strategy I would suggest we should all use if AI is not in our wheelhouse and in our circle of competence. So this is the video which I wanted to get out today. And I'm sorry it is not our usual video, but I wanted to get something out because of the Fed news, which I was waiting for. And this is why I couldn't record it in Chennai. Thanks for watching the video today, and I'll get a better one out for you from Paris soon. Thank you for being with me on BeRich today from Delhi. Bye.